What's up, you beautiful people? This is Real Talk Real Estate. I'm David Greene, and this is the David Greene Show. Today, we're going to be talking about the stock market, the beating that it's taking, and more importantly, why it's taking it, and most importantly, what that means for mortgage rates, at least most importantly to us, real estate investors, probably not most importantly to all the rest of the country, but for most of us, that's what we're interested in. So if you're wondering what makes rates go up or down, it's not necessarily Jerome Powell and the Fed, it's market dynamics like supply and demand. We're going to be talking about what factors influence supply and demand, how Wall Street is thinking, and why you're hearing so much negativity and some positivity on the news on this topic. If you've not already done so, please take a minute to subscribe to the channel. If you like what you hear, you'll get notified when I go live on YouTube. You can also subscribe to the podcast at Apple Podcasts and Spotify. And if you like this stuff, share it with other people that are interested in real estate. A lot of people don't know that I'm not the Bigger Pockets podcast host anymore. Had to make my own show. So that's what this is. And a lot of people that follow me only did so from Bigger Pockets. So if you could do me a big favor and let everybody know that still listens to Bigger Pockets, hey, if you want to hear David Greene, you got to go to the David Greene Show. He's got some fire content over there. I would appreciate it. All right, let's get into our first video, and then we will stop through and answer questions that come in on the live so everyone can hear. Our first one here comes from Devin Figath. Hey, David, what are your thoughts on Ray Dalio's changing world order that we are finishing phase 5 and heading towards phase 6, which is war and the change? Really good stuff. I've linked to this video in the past in my other videos. By the way, let me know in the live if you guys can or can't hear me, please. And I think President Trump is trying to stop exactly what Ray Dalio warns is going to happen with a lot of these tariff talk with the manufacturing. He recognizes that even though America feels like it's doing good right now, the analogy was given that it's like a bodybuilder on steroids. Looks really good from the outside. Inside, the internal organs are dying. And that our debt is ballooning. We don't make anything. We are falling into a really bad trap where, like Ray Dalio talks about, near the end of a country's dominance, the people that live there don't want to do work anymore. They want to attend social events. They want to party. He's got a video and it shows all the men walking around in tuxedos. And they all don't want to do hard work. And they've become entitled. And that's how their country is unable to produce enough income to pay all of the debts that they have taken on, as their monetary system has become inflated, which is what happens every single time that a world power loses its position. And then another one comes and takes it, which Ray is basically warning us is China. Their people still work. They're still hungry. They're like America was 50 years ago, 100 years ago, with a country full of people that want to be great. We now have sort of hit the championship level, and we want to, how do you put it? We want to enjoy the fruits of our labor in perpetuity. We don't want to have to keep getting after it. That, of course, doesn't mean every single citizen doesn't want to work hard. Many of you listening to this have decided that you want to work hard. But if that's the case, you can clearly be honest with yourself to the point that you recognize not everybody does. And it makes things harder for those that do. And putting tariffs on other countries and bringing manufacturing back to the U.S. or the U.S.'s partners is Trump's plan to make sure that our country doesn't cease being a superpower and get taken over by somebody else. Chris Lloyd says, did Ray Dalio ever cover a country that avoided the cycle and what they did differently? I believe his theory in the book and the video, The Changing World Order, was that this has never been avoided, that every single world power has followed the exact same ultimate path and went through the same cycles. And that is what is so concerning about the stage that America is in. We are entering into the danger cycle. That's basically the last one before another world power takes over. If you guys would like to get more news like we're going to be talking about today, but you don't want to have to watch a whole video, head over to realtalkrealestate.com/text-letter, where you can sign up for my newsletter that has information about me, interest rate updates, new loan products that we are going to be delivering at TheOneBrokerage, as well as relevant news articles, what's going on in short-term rentals, a featured property of the week for my property management company. Lots of cool stuff delivered directly to your phone. All right, let's get into our first video here.
A lot of people are concerned with what's going on. Yesterday, the market had another, 2.5%, 3% correction, give or take, whatever the number was. Here, JP Morgan Chase details exactly how they think Trump's trade war will play out and what investors should do. Okay, so let's see what the story from Insider is saying in regards to Chase's predictions with Trump's tariffs. Okay, so JP Morgan Chase predicts Trump's tariffs will lead to some deals with trade partners with the effective tax rate rising to 10 to 20% compared to 2% earlier this year. The firm noted this represents a meaningful increase in imports duties, but lands within Wall Street estimates pre-Liberation Day, expecting economic growth to slow, unemployment and inflation to rise, but the U.S. to avoid a full recession. The bank recommends structured notes for investors, stating they can simultaneously provide defensive exposure to stocks while delivering income through options premiums, upside, offering a strategy to navigate the tariff included market uncertainty. JP Morgan Chase advises incorporating hedge funds into diversified portfolios, noting that volatility will allow hedge funds to exploit market mispricings and relative value play across asset classes. Tom.
Well, Business Insider is covering JP Morgan, and JP Morgan had a big letter that came out a week and a half ago. And one of the things that people noted in there is they seem to be having or trying to have a calming effect on investors. Like they're saying, hey, we think the tax rate will be 10 to 20% of some of these tariffs compared to 2%, which is what we estimated pre-Liberation Day. So what they're trying to say, Vinny, is, hey, what we said before Liberation Day when the market started going crazy, and that was April 2nd, hey, it's happening. It's happening about that way. So they're trying to have a calming effect. And then what they're mentioning to people is, structured notes. And I won't go into deep detail. Adam could probably talk about it too. But a structured note is basically an investment vehicle that allows you a little bit of downside protection and a little bit of upside protection, and you get a little coupon in there. So what they're saying is there are other investment products that are designed for times when the markets and the financial instruments are volatile. And I felt like, Pat, that what Business Insider was covering, but they missed the headline. I think they blew the headline. It would be JP Morgan recommends calm and consider alternative investments as the tariff situation, trade war plays out. And we think it's going to land 10 to 20% tax on certain goods, which is what we said before Liberation Day. And I think they missed the headline because I think that's what JP Morgan is. That's exactly what they're saying here. And oh, by the way, call JP Morgan because we can help you buy some of these things. Operators are standing by.
Adam.
I guess, for those of us that support Trump, many of us in this room, including myself who voted for Trump, at what point are we going to sound the alarm and say, I don't know, is this actually working out? I think we all understand the need for tariffs. I think we all understand the need for taking on China. I think we all understand the need for not kicking the can down the road. But at the same time, when are we going to say, is this actually working? I think it's totally fair to ask questions. This is Tom and I were talking about this earlier. The number one story in the Wall Street Journal was the following. The Dow is now headed for the worst April in 100 years as investors send a no confidence signal to the market. Now, we all said brace for impact. We kind of have to have a short term, take a couple steps back in order to take 10 steps forward. But the market is getting a little fearful. As Warren Buffett always says, be fearful when people are greedy, be greedy when people are fearful. I'm still investing in the market. And I'll always bet on America. But if you go to the Fear Greed Index, which we tend to take a look at on this show, right now, people are in extreme fear. So, I don't want to be, this is not a joke, but on Liberation Day, April 2nd, the only thing that's been liberated so far is trillions of dollars of wealth from the U.S. stock market. And I don't want that, nor does anybody want that. But since then, since there's potentially the worst April in almost 100 years, the Dow is down, stocks are down, the S&P is down, the dollar is down, U.S. treasuries and bonds are down, consumer sentiment is down, gold is up because that's obviously a store of value, the VIX is up because that's volatility index, and the Fear and Greed Index is very fearful. So at what point do we say, look, Trump, we're rooting for you, bro? But hopefully this thing turns around very quickly.
Is 3 months too, and I get it, Adam, trust me, I'm with you 100%, but isn't this something that we have to go through as a nation because of how horrible everything. What are they, $37 trillion in debt?
Yeah.
Nobody respects it.
I'm going to answer
Yeah,
this
go
and then
ahead.
I'm going to let you
Yeah,
do
go
your
ahead.
thing. The debt is obviously one thing, but the tariffs are a totally other thing. I understand, what Doge is doing, but
Yeah.
if Trump, who is very mindful of his legacy and how things are talked about in the news, even if he doesn't trust the mainstream media, this is the lowest S&P has ever been since inauguration for any president in 100 years. So this is not a good look for Trump. We're all rooting for this to turn around.
Yeah.
But my simple question is, at what point do we sound the
great
alarm
question.
bells
So
and
let me-
say,
let me-
I don't know?
Let me tell you what I did yesterday.
Sure.
So for me, yesterday, I looked into a couple things. I went and looked into, and it's so funny you were saying that. You were kind of headed in that direction. Rob, can you go pull up the following? What are the longest any trade deals took? Go on ChatGPT and ask the question, what is the longest any trade deal took? Okay. If you pull it up, here's what you'll notice. I wanted to find out what's the longest. Okay. The longest trade deals ever. Doha Development Round, WTO, 23 years. It's still going. EU, Mercosur Agreement, that's EU, Argentina, Brazil, Paraguay, Uruguay, 1999 to 2019. Okay. And it's still not ratified. Okay. Then you got Transatlantic Trade and Investment Partnership, 13 years. WTO General Agreement on Trade and Services, 10 years. Canada, EU, 8 years. And then I want to say, put the fastest. And here's what I found with the fastest. U.S. Jordan FTA, 4 months. This is in 2000. U.S. Australia FTA, a trade agreement, fastest trade deals, 1 year. U.S. MCA, 1.5 years. That's U.S. Mexico, Canada, 2017 to 2018. U.S. Singapore, 2 years. So even the fourth fastest was 2 years. Okay. By the way, people who are watching this, they're shaking right now. You understand what I'm saying? They're kind of like, what are you talking about? Yeah. It's going to take
2 years
this long to go through this. That's what you think is going to take place. Well, if this is truly something that's a dramatic change that we're going to be making, this is something we have to go through. So now, I then looked up to see what companies were taking a hit, okay? And there's two different types of deals. Bilateral trade deals, 2 countries, it takes 1 to 5 years. Multilateral trade deals, 3 countries plus, takes 5 to 10 years, okay? But in the China trade deal, there are a lot of companies right now in China that are taking a hit because to them, they're just shutting down. They're telling employees, go home, we have no work for you. And this is real. That's happening, okay? Mm-hmm. And some parts of America as well, some places are shutting down saying, we don't have work for you. We can't afford to have work for you. So the pain is there as we're going through it, right? You're hearing some small business owners talk about, I finance my, my mortgage, I've taken money out of my mortgage to be able to do this and all the stuff that they're talking about. So the pain is definitely there. I had no idea what was going to happen with the Yetis. I had no idea. When our team said, Pat, they're not.
All right, so the prevailing sentiment here is basically these deals take time to work out, and we are hyper-focused on what's happening in the stock market right now, but it's not good. We're going to get into that a little bit more in a minute here. Mike G says, David, I just wanted to say I was able to talk to Landon Chase this weekend at an Easter service about how great your latest video was with him, or with him was. He had great things to say about you as a person. Landon's an awesome guy. Really have enjoyed getting to know him. He attends a church, Trinity Church in Scottsdale. And if you guys want to see what Mike is talking about, then check out my podcast, The David Greene Show, and look for Real Talk Realtor, the interview with Landon Chase. Naweed says, I wonder if that's actually how you say David in a different language. Anybody know in the comments? Is Naweed a form of David? Kind of looks like it would be. Hey, David, the tariffs might take some time to be digested by the markets. Do you think the anticipated housing stabilization appreciation is now postponed until 2026 or possibly after? It's so hard to call these because things are changing so often. My gut's telling me unless we see a rate drop that is significant, not like half a point or a point. I'm talking about high 3s, mid 4s, maybe. We may see prices not only come back, we may see them drop more. It's like the only time in my career that I've seen we are probably headed towards more foreclosures There are not buyers that want these homes. People don't feel confident about what's going to happen. And we've done a terrible job of managing the expenses associated with real estate ownership. The insurance rates are ridiculous. The interest rates have gotten really high. They're ridiculous. The property taxes might be the next thing that some states start imposing on people. The cost to repair them has gotten insane. We've got sort of too much of our population is that upper class that Ray Dalio warns about that doesn't want to work. And so you don't have a lot of options when you want to get something fixed. A lot of people don't realize when you think you're calling a mom and pop HVAC company or a mom and pop electrician, you're actually calling a company that kept the branding of when they were mom and pop, but they sold to a huge conglomerate or massive company that combined all the mom and pop brands of all the HVAC companies in their city, consolidated costs by putting them all in the same software and using the same staff to dispatch people. And then when you call to get quotes from different companies, you're getting the same quotes from everybody and they know, oh yes, Mrs. Jones, we know she just called about Acme HVAC and now she's calling Smith HVAC. It's the same company and they can keep prices high. And you don't know that because it doesn't look that way. They own them all. This is a way that companies can keep prices high and real estate investors or homeowners that don't know how to do stuff on their own get screwed. You're less likely to know how to do stuff on your own if you live in America right now, because for the last God knows how long, decades, we've been outsourcing all the manual labor jobs overseas. And I'm just as guilty about this as anybody. I know how to change a tire. I know how to change the oil in my car, but if I had to do it right now, it'd take me a minute to figure it out. I don't even think I own a car jack right now. I don't have those things. We tend to use our minds and work white collar jobs in America. We've outsourced all the blue collar stuff. What happens when we need a blue collar job is we get hammered on the price of it because we don't have enough blue collar workers. We don't have people fighting for those positions anymore. And it's put real estate owners in a really bad position. And that's why you're seeing so many real estate values are not only appreciating anymore, they're dropping and they're going to start going into foreclosure in a lot of markets. There's nobody to buy the houses. People aren't traveling to short-term rentals when they're afraid of what's going on with the economy and they don't know how things are going to go. And everything costs too much money. They're just not vacationing. So you could have bought a property in a really good scenario. It looked great. You got a good deal on it. What do you do when people just stop traveling? There's not a whole lot that you can do. You can't anticipate that. You can't control that. I was talking to somebody earlier today. He might be watching the live right now. I won't say his name, but he gave me a story about how he bought a cabin in Oklahoma in a prominent short-term rental market. And he bought it subject to via a real estate investment specialist company that absolutely ripped him off. They came and they said, hey, we help real estate investors make money through real estate investing. If you don't know anything, we've got off-market deals. We've got sub-2 financing. We can even help you with accelerated depreciation, and you can become your own real estate professional if you buy these properties. They're not licensed. They're not agents. There's no regulatory body. They're not fiduciaries. They have no obligation to you at all. He buys a cabin from somebody else who knew that the thing was sucking, but he didn't know that. $800,000 cabin for 4 bedrooms. He's buying it based off the fact that he's being told this is going to make over $100,000 a year. Well, guess what? He bought it, hasn't rented since. Nobody wants it. Great looking cabin, really good pictures on it. Nothing you could do to improve it. He just got ripped off. The owners of that cabin knew this thing is in a saturated market and nobody's visiting. They made up numbers that they gave to him. They sold it to him sub-2. They got $100,000 of a down payment right off the bat, and then another $100,000 that he owes those people. And they don't have to make the massive mortgage payment on it anymore. He does. This is a person who watched all the podcasts about real estate investing. This is a person who wants to get into the game that everybody's making look nice and rosy. How is he supposed to know? We can all criticize the people who made these decisions. You know how many people are out there getting ripped off by people with smiles on their faces because nobody wants to work real jobs anymore? They want to find a hustle to be able to rip people off and sell a dream to somebody. That has unfortunately become way too common in the country. And it's put us at a big disadvantage with a lot of other people. So I anticipate that so many people bought these properties for so much more than they can sell them. And nobody really wants to buy them right now. The banks are going to take them back. You know what the banks are going to do? They're going to package them up and they're going to sell them to private equity, or private equity is going to buy the bank so that they can get at the real estate holdings, the REO involved there. And then they're going to have inventory that will never hit the market again. When we pull out of this, you'll never be able to buy that property when the economy gets better. It freaking sucks. Like, our system we have right now is a tiny percentage of people at the top making god-awful amounts of money, huge corporations. And then all the people at the bottom sort of have to get that money filtered through taxes that go to the government, then gets reimbursed to the people that are at the bottom through government programs, through Section 8 housing, through welfare, through free public education, through free healthcare programs. All of the government systems that we have that come through taxes that get paid by the couple of people at the top. Well, guess what? If you're one of those couple of people at the top, you think you don't have your hands in those politicians, you know they need you. The politicians know they need those big corporations because that's where all the money comes from. People aren't making it themselves at the bottom, like an honest living, right? So we kind of have this like ugly understanding that if you're at the bottom, you complain to get things for free. And if you're at the top, you pretend like you care about the people at the bottom by throwing money at charities or initiatives that sound good when you really don't give a care at all. And the people in the middle get completely passed over by both. That is not a sustainable place to live in. And we're going to be talking in a minute here about why the stock market is getting hit so hard and what that might do for interest rates.
iPhone may say designed in California, but its true story begins far from Silicon Valley, in the sprawling, humming factories of China. In fact, for years, Apple's secret weapon wasn't just sleek design, but a powerful invisible supply chain stretching across Asia. But now that lifeline is in fact under fire, as President Donald Trump unleashes towering tariffs and promises to haul factories back to American soil, Apple faces a crisis that could shake the very core of its empire. And what was once a symbol of global cooperation now stands at the heart of a fierce trade war. Here's the full story in our next report.
Every iPhone proudly bears the line designed in California. But its real birthplace lies thousands of miles away in China. Apple sells over 220 million iPhones each year, and by most estimates, 9 out of 10 are made in China. From shiny screens to battery packs, China produces, assembles, and ships them. And the US, which is Apple's largest market, remains their main destination. However, this tight relationship is now under threat. US President Donald Trump has slapped massive tariffs on Chinese imports, with some reaching 245%. Though smartphones and electronics were briefly exempted, Trump hinted that more levies are coming. Nobody's getting off the hook, he warned on Truth Social. And now the entire electronic supply chain is under review. Apple's global supply chain, which was once a strength, has become a weakness. The US and China, which are the world's largest economies, are tightly interwoven, and Trump's sudden tariffs have shaken this foundation.
China, 67%. That's tariffs.
Raising one big question: who needs whom more?
Currency manipulation and trade barriers.
The tariff itself would move it to $2,000. If iPhones were made in the US, we estimate it would cost $3,500. And now it takes 7 to 8 years to actually happen.
All right. So we're talking about how these tariffs would affect American corporations, like I just mentioned, which from my perspective are basically where the majority of the money gets made in the country. Then it gets filtered from taxes into the government, where it gets redispersed to the people that are at the bottom that get enough money to stay alive, but they don't get a sense of pride, accomplishment, or the ability to easily make their way up to the top, or more easily do so, because all of the wealth is controlled by the huge companies. And if we moved an iPhone from being made overseas into America, the price would jump up to $3,500 a phone.
China gained massively from hosting Apple's production lines. The partnership helped launch Chinese manufacturers into global players. When Apple was struggling in the late 90s, it found a lifeline in China's rising economy. And in 2001, Apple officially entered China, partnering with Foxconn to make iPods, MacBooks, and eventually iPhones. At first, China wasn't ready to build something like the iPhone. Apple handpicked suppliers and invested in them. One example is Beijing Jingdiao. which transformed from cutting acrylic to machining glass for iPhones. But as Apple's profits soared, its footprint in China expanded. Foxconn's iPhone City in Zhengzhou became the world's largest iPhone factory. By 2024, 150 of Apple's top 187 suppliers had factories in China. Advanced chips come from Taiwan's TSMC, and rare earth minerals, crucial for cameras and speakers, come from China. There's no supply chain more critical to US than China, Apple CEO Tim Cook admitted. But now Trump wants to bring manufacturing home. Millions of workers crewing in tiny screws will come to America, claimed US Commerce Secretary. But shifting won't be easy. Apple is also battling Chinese rivals like Huawei, Xiaomi, and Vivo. In 2024, Apple lost its top spot in China because the country's weak economy and the ban on AI tools like ChatGPT hurt Apple's appeal. And despite a $500 billion US investment, Apple faces an uncertain road ahead. Trump's tariff plans change often, and fresh levies loom large. Apple's once reliable Chinese supply chain is now a fragile lifeline. And with little time or room to move, the world's biggest tech company faces one of its biggest tests yet.
Greeting you with aloha and namaste.
I love India. Presence, occupation of a territory by another country pertains to India. What we saw in Kashmir.
How do you see Trump's America?
Yes, the current administration behaves differently from the previous administration.
Are you saying that there are foreign powers who are trying to bring down the current government in Syria?
Exactly. Iran, maybe Russia.
All right. More scary stuff here. As it's not unrealistic to think that prices are going up. They probably are. And if you hate that, you're going to hate tariffs. If you're okay with it, I don't think anyone likes it, but if you can accept it, you might see some of the upside that this is something that might be good for the overall health of the country. Jennifer Roof here says, it's only been a short time since the negotiations started. It can take months to negotiate buying a house. Why does it surprise anyone that it would take some time for countries to negotiate? Now, Weed says that's exactly how you say it. Now, Weed, nicely done. And Steve says, unfortunately, we are too used to instant results, gratification, and easy stock market gains. Corrections needed. I think that plays a big role in people's emotional interpretation of this. We all compare what we have to what we think we could have or what we're used to having. I remember when I was working as a deputy in the jails that we were supposed to turn off the TVs at 10 o'clock at night, but a lot of the time you just leave them on all night long, and the inmates would sit there and they would look out their cell, they would watch the TVs. Well, when certain things would happen, they'd go on lockdown or there was issues on the unit, we would turn off the TVs, and like you would think that somebody killed their grandma. It was this, like, once you get used to having something and someone takes it away, it feels unfair, even if it was never realistic. And I think this applies a lot to real estate investors. We had years where you just freaking threw a rock into the lake and hit water. Everything made sense. We all made money. You were making money, but you were mad you weren't making more money. People would get a house with like no money down, refinance all of it, get a better rate when they refied it, go buy 2 more houses. Both of those would go up. They would refinance those. They would go buy 4 more. Those would go up, and they would be mad that they only made $800,000 when somebody else made $2.5 million. And this was all you ever heard about on podcasts. That was never sustainable, but nobody wanted to hear it. Now we're kind of entering into a point where we're paying the price for all that money that we printed that made that possible in the first place. We weren't super smart investors. We weren't brilliant people. We just had crazy inflation. And if you're able to get buoys in the water when the tide rose, you did really good. And a lot of that is now coming to an end, I guess would be the best way to say it. And this is much more of a normal economy, and the state of the country really hangs in if we can get behind working some of these jobs that we were able to outsource for a long time or not. A couple comments here. Sean says the U.S. won't win a real tariff war, which I don't know that I disagree with him on that. I think that we're not in a real tariff war, but that's a subject for another video. He says Americans aren't going to work 40 plus hours at $15 an hour with no unions rights. And he could be right about that. In a lot of parts of the country, people won't do it. Why not? because they haven't had to before, because they're under the impression that they won't starve to death if they don't, because the government will come bail them out, right? We got all these rich corporations that we're taxing, and that money makes its way down to the people that don't want to work the jobs, and they just can live off of EBT or food stamps and Section 8 housing and a lot of the safety nets that we put in place. So yeah, why would you work a job when you don't have to? You could just do nothing. But here's the thing. This is one of the reasons that the stock market is getting hammered. We're going to talk about this here in a minute in another video. But the stocks are basically like shares of a company. And just like you would buy shares of a REIT to buy real estate, if you thought that the cash flow of the properties was really good, you'd pay more for more cash flow. You pay more for that short-term rental if it's going to make more money, right? Everybody understands this. You pay more for a stock if the company's more profitable. Well, what happens when the company is having to pay tariffs to import things from other countries and we don't have stuff set up in this country yet? What happens when we do have stuff set up in this country, but you have to pay fair labor prices for it instead of basically cheap and almost free labor from other countries? What happens isn't that prices necessarily go up. What does necessarily happen is that profits go down for that company because their expenses go up. Can they choose to pass it on to the consumer? Yep. Can the consumer choose not to buy it? Yep. Can another company figure out how to do it better, cheaper, and more efficiently and run the company that tried to pass on the costs to the consumer out of business? Yep. It actually creates competition, which is something we haven't had to have because we got things so freaking cheap for so long that people got lazy. Can you imagine trying to play with like the best player on the team? Like you're playing with Michael Jordan at a pickup game. You don't really have to try that hard. Are you working your butt off fighting for everything? Or are you just letting Michael Jordan carry the team? Kind of had that in America for quite some time now. And that is likely going to be coming to an end. So I think Sean is making some good points here that people aren't going to want to do it, but that doesn't mean that it can't be done or that there's no chance. What it does mean is that stock prices are likely to keep coming down, primarily because profits are going to come down for those companies. And we're going to talk about in a minute how that is going to affect mortgage rates. But I don't have a crystal ball just because my head looks like one. I do not think that we are seeing the end of the stock market going down. Depending on how these negotiations work out with other countries, depending on how we end up with trade partners and allies, and we end up with trade enemies, maybe you say, the people that align with China, we may see the company profits in America dropping even more. You may see big corporations in America literally going out of business because they can't make it work if they don't have the cheat code of Chinese labor making things basically for free. And I don't know, but I think that stocks could be on the way down, possibly a lot, depending on how the conversations work out with other countries. Let's get into a video specifically about the stock market.
All day I heard that today's rally was just a bear market rally, okay? There's a phony spike and the market will go right back down the moment the president posts that there'll be no compromise on tariffs. Who knows? Maybe Fed Chief Jay Powell should be deported. We keep hearing that the Dow gained 1,017 points, S&P climbed 2.5%, and NASDAQ jumped 2.7% on a bogus set of facts about a possible deal with China. A deal doesn't exist. But then right after the close, we get incredible news that is sure to drive this market higher. The president said he has no intention of firing Fed Chief Jay Powell, which, by the way, was the proximate cause of yesterday's collapse. Never did, never will, Trump said about a prospective firing. Yes, he said he wants Trump to be more active about lowering interest rates, but so is everybody else. So now we have to ask ourselves, can we still call this a rally in a bear market? No, I think it's got to be at least something bigger. Nevertheless, we have to ask ourselves if Powell's fire, now that it's off the table, what can take us higher still after what we have to expect is a nice follow-through rally tomorrow, maybe tomorrow morning? First, of course, it's entirely possible we resume the decline after a short, sharp spurt higher on the welcome news of Powell staying. That's what happened last time after we heard that there'd be a 3-month pause on most of the tariffs. I don't deny it's a possibility, a very real possibility, because it happened before. It was a fairly good possibility it could happen again, and we might just go back down. Second, though, there's a great misunderstanding about how real recoveries get started. They always start as bear market rallies, for heaven's sake. They're rarely based on hard facts. There's usually...
For those that are unfamiliar with these terms, a bear market is something where it's going badly, and a bull market is something where it's going well. And the way that I remember this is that a bull market charges forward and a bear market eats up your profits.
Tremendous skepticism toward these advances because of previous failures that only the most bold or the most foolish catch the beginning of. Now, look, just because the president doesn't want a constitutional crisis and is going to keep Powell doesn't mean we have more to go on. For example, there's been no sign of change from the administration on the trade wars. I mean, he's talking about maybe we want to have 0, maybe 45. I mean, he's not giving us anything beyond the amorphous closed-door statement attributed to Treasury Secretary Besson that the China tensions are not sustainable. Well, that seemed almost cheesy in its prurient derivation. But again, when you get this kind of rally, it doesn't happen because someone gave you the green light to start buying. You don't get a statement from the president the trade war is over and everything's back to normal.
If you're wondering what the trade war has to do with any of this stuff, you're not crazy. This isn't something real estate investors understand. Here's my take on it. Like I said earlier, stocks are valued based on the profitability of the company. If we have to put tariffs on other countries, American companies' profits go down, meaning the value of their stocks decreases in order to get someone to buy it because the quote unquote cash flow, that's the equivalent we'd have to a real estate investor, will be less. We haven't actually put a lot of these tariffs on other countries. We've said we're going to, then we've given a 90-day reprieve for them to come and negotiate with us, but we don't know if it's going to work or not. If we make a deal with them, we won't have extra tariffs on them. Stocks are going to go good. If we don't make a deal with them, we're going to keep tariffs on them or put them back on. Stocks are going to go bad. So you have all the Wall Street money that's kind of like a double Dutch game of jump rope, trying to figure out, does the money want to go in? Does the money want to come out? And they're following this news like a hawk to try to figure out like the advantage of, oh, is there a word that South Korea might sign? Because if they do, then Japan might sign. And if they do, then we've got 2. And then these guys are going to sign. And then we're going to have a whole bunch. And then China's going to have to negotiate. And then they're going to get rid of the tariffs and our stocks are going to do good. So let's buy. Oh, did I just hear that China is actually working on a deal with Japan right now? And if they get that, then they're going to have Russia and the 3 of them are going to be able to create an alliance and not need America. That's really bad. That means we're going to tariff them. That means that companies are going to make less. Stocks are going to go down. I better sell and wait. This is the game that's playing, and it's kind of silly to pay a whole bunch of attention to what the stock market does every day because it goes up and down based on the news, and the news changes literally not even every day, but every hour.
By the time there's definitive proof, usually the rally's been going on for a while. Usually you miss the rally. So what could happen positively? Again, this is still most likely a bear market rally, one that could be rolled back at any moment. There's still plenty that's wrong. But you know what? There have been many rallies that have started like this. After all, we've gone up 38,000 points since I first bought stocks 45 years ago. And during that time, we've had a bunch of bear markets that ended on nothing but a whimper that only led to something bigger for graduating into a full-blown rally. Let's go over some of the clues to the next move because I think history is instructive. First, we've seen the headline in the Journal, Dow headed for worst April since 1932 as investors send no confidence signal. Now, can we agree that as terrible as things may be, it's a long shot to repeat the Great Depression here? We put tariffs on countries that are higher than the tariffs that partially led to the Great Depression. But man, I mean, we had 23% unemployment in 1932. And by the way, you pseudo-historians out there, the market bottomed in the summer of 1932. So if you're going to start drawing comparisons, I mean, we could be headed for a bottom now, even as it's covered with silt and can't be seen. Second, it's entirely possible that one of our trading partners actually blinks. Where is it written that every country on earth, even Lesotho, will defy the president of the United States? Don't you think someone caves? What happens if India orders 40 Boeing planes on top of those rumored fighter jets from Lockheed? What if Korea agrees to take only...
This is in reference to news that China basically got mad at us for putting tariffs on them, which is, it's a little weird because they've had tariffs on us for a long time, but they didn't like it. So they wanted to look strong in front of their people. And they sent back 2 planes that Boeing made that they were going to buy back to America and said, we won't buy them, have somebody else make them. I believe the company was called Airbus. And so he's referring to what happens if something changes and a whole bunch of airplanes get sent.
Our natural gas and all of it. What if NATO decided to take every missile that RTX makes, or perhaps some bigger European countries buy RTX's missiles and donate them to Ukraine, which could be hapless without them? What if Germany announces it will close several of those gigantic Mexican car plants and open new ones in specially designed American industrial zones in specific red states that have higher unemployment? How about if Japan says it's totally agrees with President Trump and is willing to break down right now, this minute, for Tokyo Electron super plant in Dothan, Alabama, or perhaps Shreveport, Louisiana. I don't think any of these are particularly likely, but if it only takes one of them changes the whole game. And what will be this, not that. Like with the law firms, Trump only needs to roll one, roll them all. Third, we get actually some soft numbers, economic numbers. That would make it much easier for the Federal Reserve to, cut rates. Weak unemployment. Hey, how about lower car prices? Stranger things have happened. Powell would take action. Fourth, say President Xi invites someone to China, maybe Treasury Secretary Besson, maybe Elon Musk. And I don't know, Tesla quarter here and there. Okay, yeah, I got that out of the way. And the situation is so out of control that maybe he says, you know what, instead of this, let's go for this. Okay, because we're obviously at this point headed for some sort of confrontation, and it won't be about trade. Is this possible? Musk has been there plenty. He can be, he can ask about Tesla and then come back with something positive about trade. If China is willing to come to the table, it's important that President Trump not gloat. That we can't have that. You got to save face. Got to let China save face. I mean, it would be hugely positive for China to get rid of these tariffs. I'm sanctioning the president to say to Xi that he has finally chosen to get breaded up. But that's about as outrageous as I'm willing to accept. I mean, Musk can be the man to get it done, though. I mean, who doesn't want to be the man? I want to be the man. Fifth, in the next 30 days, we could see 5 big mergers and 5 big IPOs because this dry spell has now gotten ridiculous. In every case, the sellers have come to their senses and recognize that they aren't going to get what they want, okay? They can't always get what they want, but they can get what they need. Totally reasonable. Hey, we just need 5 of each, okay? I mean, that would do it. I'm telling you, that would do it. Business as usual. 6, perhaps oil truly does crash. Why not? Who's to say it can hang on at this level? The president can threaten to do something to the major Middle East producers that we don't even know. And next thing you know, we're flooding the world with crude and it drops to 30. At 30, the Fed has the flexibility to cut rates. And now that Powell's back in the president's good graces, I mean, wow, you know what? He probably wants to do it. I think that the long rates set by the bond market will go down if the short rates get cut, if oil collapses, okay? Now, notice, I'm not even calling for a return of the Mag 7 remake. I'm not saying the data center is alive and well. I'm not saying that Tesla shouldn't be up 11 or 12, and it is. I'm not calling for Temu to start advertising again. I'm not asking for ByteDance to be sold to President Trump so he can dole it out to followers of Truth Social. None of that has to happen for this market to start running, not one bit. But the bottom line, I just gave you 6 potential positives, and you only need one of them for everything to start getting rolling. And this will be counted as a real rally and no longer dismissed, as you know it was all day today. You heard it. I kept saying to my guys, hey, come on, Dylan. It's like, they could be real. And it's real. What are the chances that all 6 of my ideas go wrong? Inconceivable. Sooner or later, somebody's got to blink, all right? Doesn't matter who. And when that happens, we're going to be in much better shape. And you're going to be hearing not this, but...
So it sounds like Kramers' position here is that the only thing forcing people to sell off stocks and the stock market prices to go down is people don't like the uncertainty of the China and U.S. not coming together to negotiate. I don't know if I agree with them 100%. I don't think it's that simple. I think we could come together and negotiate, and that could actually be a really bad result, in which case people would sell off more stocks and it would be confirmed we're not going to have a deal. We've got a trade war that could become a real war, and that would be really bad for the stock market, which if you hang out a little bit longer, we'll talk about what that will do for mortgage rates.
This. Philip in New York. Philip.
Yes, Jim, a big Irish booyah for you over here from New York State. Good afternoon, and how are you?
I am doing fine, thank you. The president, Powell's going to stay. Tesla's up big. I mean, what is not to like? Okay.
Listen, I gotta love it. I got a question for you. UPS. UPS is actively expanding their global operations and investments in their network, making enhancements to facilities all the way across Asia Pacific and Europe. These were strategic moves that were made by UPS. Jim, I've been in this stock strategically placed, very nicely placed for the last 18 months. However, my backside has a little rug burn on it from the slide that it's been doing for the...
Well, look, I think that, rug burn aside, and by the way, I like Mohawk carpet on that. I do think that you're going to run into a little trouble because world trade is not what we think it is. And look, I really like FedEx, and I'm not just sitting here pounding the table from FedEx either. So we got to be careful, but I appreciate your call. We got to be careful. Let's go to Thomas in Minnesota. Thomas.
Yes, good afternoon, Mr. C-Notes.
Hi, what's going on?
I'm just curious on your thoughts on if Target is financially healthy enough to be invested in at this time, or
well, it's down 30%. It sells at 10 times earnings, but the
all right, we don't need to get into the specifics here of every individual stock, but you guys here, this is what everybody is watching that invests in stocks. They're looking at people like Mr. Kramer here and trying to figure out, should I or shouldn't I? Are they down and I should buy because they're going to go back up, or are they going to go down even more? We don't know, and I don't know that it's healthy to pay a whole lot of attention to if that's the case. Here's what real estate investors should be paying attention to, my opinion. When people sell their stocks, you'll often hear CNN News or MSNBC, though they don't want the president to look good. So they'll say things like $3 trillion was evaporated from the U.S. economy. That isn't actually what happens. You sell your stock, and all you do is convert the energy that's held in the stock market to energy that's held in cash in your bank account. You moved $3 trillion from the stock market to somewhere else. I'm using the example of a personal banking account because that's what one of us would do. But these big Wall Street companies don't. They can't just go put it in the bank. They take the money out and they have to go buy something else with it that will get a return. And this is where this gets really interesting for real estate investors. So congratulations on making it this long in the video. If you don't mind, please like the video, subscribe to the channel, and leave me a comment to let me know what you think about the content so far, and then share it with someone that you love. When the money comes out of the stock market, it has to find somewhere else to go. No one's really thrilled about putting it in another country's stock market because we don't know how they're going to turn out in the trade war either. So America is still, relative to everyone else, the cleanest shirt in the dirty laundry for where to put your money. We still look the best. So you want to keep it in the dollar. That's still the world's reserve currency. And you want to keep it in the country. So what most people will do is they'll go buy treasuries with it. These bonds that you get a very low rate of return, but they're safe. The government isn't going to default on its debt. At least that's the idea. Your money's safe there. You're going to get a lower return than the stock market. But what you think is, all right, I'm going to go park it in bonds. I'm going to wait and see what the stock market does. And then once the bonds mature, I'll decide if I want to put it back into the stock market later. At least this is a very overall principle idea of what happens. When people go buy a whole bunch of bonds, the government doesn't have to pay you a high interest rate to get you to buy them. When everyone's putting money in the stock market, the government has to offer a higher rate of return to get you to buy a bond. You don't want to buy a bond for 2% when the stock market's producing 12%, but maybe you'll do it for 6% or 7% because bonds are considered safer than stocks. As people go buy bonds, the government can go, ooh, I can lower the rate that I pay somebody on these. When they lower the rate of what they pay you on a bond, the companies that make loans for mortgages also lower the rate of what they are going to collect. They are competing with the people that are selling the bonds. And there's the rub. If all the money floods into the bond market, it puts pressure on mortgage rates. When the money's flowing there, sorry, that's what we care about as real estate investors. We're in this position where we want to know that rates are going to be going down or rates could be going up. It depends on what the stock market does. That's the point here. And because the stock market is relying on what's happening in the news, and the news is trying to figure out, are the companies going to be less profitable or more profitable? We're watching this to see what's going to happen with rates. If the stock market does poorly, this could lead to higher interest rates for us as real estate investors in the future. I'm worried about that. I don't want to see that happen. I would like to see rates come down so that we can get movement going on in the economy with housing. We can get people that sell real estate paying income taxes on that money. And you can get people out of their 3% interest rate and into a new home where currently they don't want to move out of it. All right, there you go, folks. This is the case here that if stocks go down, we might see rates going up. Something to be concerned about and something to definitely be following. But as of right now, it doesn't look like things are moving that much. You did kind of see this maybe a week or two ago where the stock market collapsed and rates came down. And then when the stock market went back up, rates went up again. All right, folks, thank you for following. Make sure you leave a comment on the channel. Let me know what you thought and let me know what questions you have about real estate. We'll see you on the next one.